Picture a pension fund manager sitting across the table from an asset management firm. She has verified that every portfolio manager holds a CFA charter. But here is the problem: the code and standards governs individuals. Who governs the firm? That is exactly the gap the asset manager code was built to close. By the end of this lesson, you will know every exam trap on the AMC and how to dismantle them. Here is the scale of this framework. Over 1,000 investment management firms across more than 50 countries have voluntarily adopted the Asset Manager Code. The combined assets under management of AMC-compliant firms exceeds $25 trillion. That tells you something important. Institutional clients demand this. They are not satisfied knowing their portfolio manager passed the CFA exam. They need a firm-wide ethics framework they can point to in their own due diligence files. Before we go further, let us lock in the single most important distinction in this entire reading. The Asset Manager Code applies to investment management firms, not to individual members or candidates. The code and standards, standards 1 through 7, govern you as an individual. The AMC governs the firm as an institution. Think of it as two parallel layers. You are always bound by both. The AMC does not replace your personal obligations, and your personal compliance does not satisfy the firm's obligations. This dual-layer concept is the foundation of every AMC exam question. The AMC organizes firm obligations into 6 components. Think of the mnemonic: loyal investors trade responsibly, disclosing performance. Component A: loyalty to clients. Client interests come before the firm, its principals, and its employees, no self-dealing. Component B: investment process and actions. The firm must have a reasonable and adequate basis for every investment decision and act consistently with client mandates. Component C: trading. Best execution is required. Soft dollar arrangements are permitted but must be disclosed and must benefit clients. Component D: risk management, compliance, and support. The firm must maintain written compliance procedures, designate a compliance officer, and establish formal risk management processes. Component E: performance and valuation. Client portfolios must be valued fairly. Performance must be presented accurately and in line with applicable regulations. Component F: disclosures. All actual and potential conflicts of interest, fee schedules, and material business relationships must be disclosed to clients. Now let us map the AMC against the individual code and standards side by side. This comparison table is your exam armor. Questions will try to blur these two frameworks, and you need to see through it instantly. The code and standards applies to individual members and candidates. The AMC applies to investment management firms. The code and standards is mandatory for CFA members. The AMC is voluntary, firms choose to adopt it. The code and standards is organized around 7 standards of professional conduct. The AMC is organized around 6 functional components. And critically, adopting the AMC does not exempt individuals from code and standards obligations. Both run simultaneously, always. Let us talk about how a firm actually claims AMC compliance, because the compliance claim requirements are directly tested on the exam. Step 1: the firm must comply with all 6 components on a firm-wide basis, not some divisions, not most components, all 6 across the entire firm. Step 2: upon claiming compliance, the firm must distribute a copy of the AMC to all existing and prospective clients. This is a mandatory disclosure obligation. It gives clients the framework they need to hold the firm accountable. Step 3: the firm must update clients of any material changes to its policies and procedures. And here is what is absent from this list: there is no CFA Institute certification step, no third-party verification requirement, no registration process. The AMC is entirely self-declared. The compliance claim is a binary switch. Either you fully comply with all 6 components firm-wide, or you do not have a valid claim. Period. Exam question 1, and this is the most fundamental AMC question you will see. The Asset Manager Code of Professional Conduct applies to which of the following? Option A, individual CFA charter holders who manage client portfolios. Option B, investment management firms as organizational entities. Option C, both individual CFA members and investment management firms equally. The answer is B. The AMC's scope is unambiguously firm level. Individual members and candidates are governed by standards 1 through 7. The AMC governs the firm. Option C is the most tempting trap. It seems logical that if the firm adopted the AMC, individuals are also covered. They are not. Individual obligations are non-delegable. Question 2, the partial compliance trap. This is the highest frequency AMC exam question. Meridian Capital Partners announces it complies with the AMC for its fixed income and equity divisions, but has not yet implemented AMC requirements in its hedge fund division. Is the compliance claim valid? Option A, valid because the firm covers its 2 largest divisions. Option B, valid as long as those divisions fully comply with all 6 components. Option C, not valid because AMC compliance must be firm-wide, partial compliance is not permitted. The answer is C. The AMC compliance claim is all or nothing. There is no partial compliance category. There is no substantial compliance provision. A firm cannot claim compliance for selected divisions, strategies, or accounts. Any exclusion invalidates the entire claim. This is by design to prevent firms from cherry-picking convenient components. Question 3, the compliance claim distribution requirement. Under the Asset Manager Code, when a firm claims compliance, it is required to: Option A, submit a self-declaration form to CFA Institute and receive certification before making the claim. Option B, distribute a copy of the AMC to all existing and prospective clients at or prior to claiming compliance. Option C, hire an independent third party to verify compliance before making the claim public. The answer is B. 2 things to remember here. First, the AMC is self-declared, no CFA Institute certification, no approval process. Option A is always wrong. Second, third-party verification is a concept from GIPS, not the AMC. Option C is the GIPS-AMC confusion trap. The one real distribution requirement is giving the AMC document to all clients so they can hold the firm accountable. Question 4, the parallel framework trap. This one trips candidates who think the AMC provides institutional cover for individual bad behavior. A CFA charter holder works at a firm that has adopted the AMC. The charter holder engages in conduct that violates Standard 3A, loyalty, prudence, and care, but the firm's policies are AMC compliant. Which is most accurate? Option A, the charter holder's individual conduct is excused because the firm met its institutional obligations under the AMC. Option B, the charter holder violates the code and standards as an individual regardless of the firm's AMC compliance. Option C, the charter holder must report the violation to the firm before CFA Institute can take disciplinary action. The answer is B. The AMC and the code and standards are parallel frameworks. AMC governs the firm. Code and standards governs the individual. A firm's AMC compliance cannot shield individuals from their personal obligations. Individual ethics is non-delegable. Question 5, the GIPS-AMC conflation trap. This one is worth extra attention because both frameworks are voluntary, both apply to firms, and both are issued by CFA Institute, making them easy to confuse. Under the AMC's performance and valuation component, investment managers must: Option A, Value client portfolios using GIPS-compliant methodology in all cases. Option B. Present performance results fairly and in a manner consistent with applicable regulations. Option C. Present total returns using time-weighted rate of return methodology exclusively. The answer is B. GIPS and the AMC are entirely separate, independently optional frameworks. Adopting the AMC does not require GIPS compliance. Time-weighted return is a GIPS methodology requirement, not an AMC requirement. The AMC requires fair, accurate performance presentation. It does not specify calculation methodology. Let us organize the exam traps by how often they appear. Think of this as your priority list before you walk into the testing center. Tier 1, the must-master concepts. Partial compliance is invalid, always, no exceptions, no substantial compliance. Firm-level scope, AMC applies to firms, not individuals. The parallel framework principle, code, and standards still binds every individual at an AMC-compliant firm. Tier 2, high-frequency traps. The distribution requirement, upon claiming compliance, the firm must give the AMC to all existing and prospective clients. The self-declaration mechanism, no CFA Institute certification, no third-party verification required. Tier 3, component-specific knowledge. Individual component requirements, soft dollar rules under trading, the distinction between requirements and recommendations within each component. Here is your complete AMC reference card. Study this until every line is automatic. The AMC is voluntary, firm-level, and self-declared. 6 components use the mnemonic. Loyal investors trade responsibly, disclosing performance. Compliance is all or nothing, firm-wide, all 6 components, no partial compliance ever. Upon claiming compliance, the firm must distribute the AMC to all existing and prospective clients. Decision rules for the exam. If a question asks who the AMC applies to, the answer is firms. If you see a partial compliance scenario, the claim is invalid. If an answer choice mentions GIPS methodology for AMC questions, it is wrong. If an answer says CFA Institute must certify, it is wrong. If an individual violates the code and standards at an AMC-compliant firm, that individual is still in violation. Final exam strategy for the Asset Manager Code. On CFA Level I, the AMC is tested conceptually, not on granular sub-requirements. The exam cares about 5 things: scope, compliance claim mechanics, the parallel framework principle, GIPS-AMC separation, and component-level themes. When you read an AMC question, run this filter in order. First, does the question involve a partial compliance claim? If yes, the claim is invalid. Second, does the question ask who the AMC applies to? Firms. Third, does any answer choice mention GIPS methodology or verification? Eliminate it. Fourth, does any answer say CFA Institute must certify? Eliminate it. Time allocation. AMC questions are typically 2 to 3 minutes each at most. The conceptual traps resolve quickly once you know the framework. Do not overread these questions. The correct answer is almost always the one that reflects the all-or-nothing principle or the firm vs. individual distinction.